You are looking at the 10K that your company filed with the SEC and you realize there is an error in your stock plan numbers. That is the worst feeling in the world. In this video, I'm going to talk about 3 ways to identify those errors before your filings hit the SEC's website. This is an area that is high risk for anyone who's involved in managing a stock plan. Errors in your financial numbers are highly visible to your finance and accounting teams and to your executives. And they can impact your company's public filings, which means they also can be highly visible to your shareholders. In a worst case scenario, an error could cause a material restatement of your company's financials. So let's talk about how to identify them so that you can correct them before they end up in your financial reports. My first suggestion is some simple calculations. I'm calling these control calculations. These are things where A plus B should equal C. My first suggestion, this is a really simple thing you can do that doesn't really even require any math. When you are running a report for a fiscal period that shows activity over that period, the beginning balance for that report should match the ending balance from the prior period's report. If it doesn't, that is a discrepancy that you need to track down. It could be something legitimate, like a data correction error or maybe a post-data termination, or it could point to a data integrity problem. Either way, you need to resolve those discrepancies. For another thing that you can do for reports that show period activity is for each fiscal quarter, the activity for that quarter, when added to the next quarter and the next quarter, should equal your year-to-date activity. This can be a great way to find data integrity errors. And then my last suggestion is for your financial reports. When you're looking at your stock plan expense, your prior expense should, when added to your current period expense, when added to your unamortized expense, those 3 amounts together should equal the total expense for your equity awards. If it doesn't, again, you're going to want to track down those discrepancies and find out what's causing them. In some cases, they may be legitimate, like maybe an equity award that was canceled, and so it's not showing up anymore in your unamortized expense. But in other cases, it could be a data integrity issue. Another thing that I really like to encourage companies to do is to spot check key transactions. So these are transactions that are significant in size, where the amount in and of itself might cause a restatement if it's an error, or transactions that are just out of the ordinary, a vesting schedule that you don't normally use, a type of award you don't typically grant, a transaction that you don't see that often. Or things that are particularly complicated. So a performance award that has some really unusual vesting, or some other situation that maybe is a series of transactions, for example, that are particularly complicated. For all of those things as they are occurring, I recommend that you flag them. And then later when you are running your financial reports, you go back and review those transactions and make sure that they're showing up in those reports the way that you expected to. And even more importantly, the way that your finance and accounting teams and your auditors expect them to. And then my last suggestion is to do a flux analysis. A flux analysis is a tool that compares accounting activity from one period to the next. It really takes a detailed look at what's going on in your financial reports to identify variances and to explain why those variances are occurring. This is a great tool. It is useful for a whole bunch of reasons. Having that kind of information about what's going on with your equity plan can help with decision making, it can help with forecasting, and it can help identify data integrity issues. So those are 3 of my tips for spotting errors before they end up in your financial statements. We actually have a whole top 10 list on this with some other ideas as well. We'll include a link to it in the show notes. Thanks for watching. I hope you enjoyed my video. If you did, please subscribe to our YouTube channel. That way you're notified when we post new videos. Heck, even if you didn't like it, subscribe anyway. Maybe you'll like the next one. Thanks.